Okay, hello everyone. Welcome back to another YouTube video. In this one, I'm going to be explaining my own personal Forex strategy. So the one I use to trade every single day. Like the reason I have certain indicators, how I place trades, what I think when I'm in a trade, how I place my stop loss, everything that you could possibly want to know, I'm going to explain in this video. And it's for all skill levels. I've made it so that it's very easy to understand for people. And just to say, so the pip hunter indicators that I'm using in the strategy, they are only available if you sign up for a membership on the Perfect Entry Trading Discord. But there's also some free indicators in there. But I just wanted to give that as a small introduction because it does include some paid indicators. Okay, guys, so here we have a naked chart in front of us. So this is exactly what you'd see on your charts if you don't have any indicators lined up. So the first one in how I build my charts, the first indicator I add is the 200 simple moving average. Okay, guys, so here is the simple moving average that I use, the 200. It's this one right here. If you search that in the indicators tab up there, then you'll find it. And then we click on it to load it onto the charts. And then immediately we see this. So for my own personal settings, I like to go into the style tab, turn off the 20 and the 50. So I'm left with the 200 moving average on its own. And then I often change it to white and increase the thickness. So I'm very well aware of where it is and where the price is in respective to it. So just a quick explanation of the simple moving average. It just aids in showing whether the current asset or the market is in a bullish trend or if it's in a bearish trend, right? So if it's above, then it's currently bullish. If it's below, then it's bearish. So that's kind of the way to think about it. And then you just base your trades off of which side that the price is on. Okay, guys, so the next indicator that I add is the trend detection system, also known as the TDS. So this is one of the pip hunter indicators. So if you have access to the package, come to the invite only scripts, and it's the last one down here. So just add that to the chart, and then you see the stars and these suggested stop loss levels. So just to begin with, I like to come in here and I like to change my delta period to 40. And if you can see what it does, I'm not sure if you could see that, but essentially reduces the amount of stars that you see in front of you. And all that does is that I get fewer stars, but they are stronger confirmation stars, right? So a bit of the background on the TDS is an indicator that is designed to show trends and to plot its findings on the candles directly. When all the confluences line up, then the color is green in the case of a bullish idea, or is red in the case of a bearish idea. And then obviously it will show you the stars, whether it's a buy or a sell. So the way it calculates its signals is by using a lot of different tools all together, and then to wait for a positive response from all those different tools. So it's a heavily modified RSI that has been converted into a long-term trend flow tool. Multiple moving averages, all of which are hidden. They're just part of the calculation. And also it uses the same code as one of our other indicators, the BACD, in order for it to calculate these signals. So the way I use this indicator, the stars are obviously my entry points. So if it's a red star, I'm looking for a sell. And if it's a blue star, I'm looking for a buy. But this isn't like the whole of the strategy. I'm going to explain how you filter through the different stars and you find out which are the really high quality stars and which are the stars you should try and avoid. Okay, guys, so the next free indicator that I use is the stochastic RSI. You find it just by searching exactly that. And then you can see this indicator here. And this one really helps me to filter out between the good stars and the not so good stars, which ones I should take. And the way it does that is if the two lines are above this zone right here, above 80 in this zone here, then it's overbought, right? It's considered overbought. So the buyers are losing their power, and then the sellers are going to step in, and then it will bring the lines back down, right? So up here, overbought, at the bottom, oversold. So you can see here, for example, at this point, it's hit the 200 moving average, it's been overbought, and then the sellers have stepped in and pushed it right back down. Okay, so you can clearly see it working in front of you. And then, so the way I use this, like to filter out the stars, is, for example, if it's overbought, right? So it's very high up here already. If it's overbought, then I'm not looking to take any more buys because that wouldn't really make sense. So if it's already overbought, I'm not going to be then buying. So these two stars I'd completely ignore anyway. And that's how I use it to filter out the stars and to get an idea of the balance in the market between the buyers and the sellers. All right, so the fourth indicator I use is one of the Pip Hunter ones called the LMI. I'm sure you guys have heard of this one. So I add that to my chart. Then I come in here and I change these settings. So I go 115 here and 4.669. So these are the previous settings. It got updated to better suit the shark out of the water strategy, but this is how I prefer to have that. And then I just turn off these outside lines, and that's exactly what I have in front of me there. So this indicator helps me to find the trend in the market, helps me to see my entries and just the overall trend. And then as well as that, I also have a second one. All right, but the difference in this one is that I come in here and I change the delta period to 10. So that's the main difference. Is the other one, the delta period was 40, sorry. And this one is now on 10. And the difference in that, I will show you, is it's much more responsive to price change. Okay, it's going to be a much more sensitive indicator. So for example here, you can see this small amount of buying candles here. So we can see here that the one with the delta period of 40 has actually stayed red this whole time through this whole movement, whereas the one with the delta period of 10 has actually gone green for these small amount of buying candles right here. So guys, there you can see this is all the indicators that I have on my charts when I'm trading. This is the whole strategy right here. And now I'm going to go through the rules of the strategy. Okay guys, so on the screen in front of me, we have the rules of the strategy. So I'm just going to walk through each one. The first one is to only buy when price is above the 200 moving average. Okay, when price is above up here, you're only looking for buys. Likewise, if the price is below, then you're only looking for sells. Okay, that is the number one rule of the strategy. We're only buying above. When we have blue stars above the 200, we're buying, and we ignore all the red stars. Same goes for if we are below the 200, we ignore all the blue stars and are only looking for red stars. The second rule is that our entries are using the stars. So like I said, if we get a red star and it's below the 200, that would be a sell entry. So the entries are on the stars. And the same for a buy. If we're above the 200 moving average, we get a blue star, then we're looking for a buy. So the third rule is to only buy when the stochastic RSI is showing oversold, and only sell when the stochastic RSI is showing overbought. As I said, it's overbought if we're above 80. If we're up here outside this zone, then it's overbought, and if it's below 20 and it's down here, then it's oversold. So we're only looking to buy when the RSI is down here, and we're only looking to sell when the RSI is up here. And as we can see actually right in front of us, we have a live example. It's overbought right now, so the buyers are losing momentum. Even though there's a buy star, this would be one that we don't take, right? Because the RSI is already overbought. So you aren't looking to place buys when something is already overbought. Okay, the fourth rule is wait for the two LMIs to go the same color. So for example here, if you're looking for a sell on this line here, you're waiting for both of the LMIs to go the same color. And because they're so different, so the one with the 10 on the delta period is so much more responsive, you can often get them in different colors. So that's why it's very important for them to both go in the same color. And the final rule is don't trade consolidation. Use your support and resistance zones, your price action market structure to avoid consolidation, because then you'll get quite a lot of fake signals and you're just going to get completely smacked around. So use your support and resistance zones to look for breakouts. But now I'm going to show you ideas of the perfect entries that I'm talking about. All right, so okay, guys, so here I've marked up a couple of examples of the perfect entries that I'm talking about with my strategy. And I think you guys will be quite surprised how simple it can be. So I'm just going to run through the rules here. These thick blue lines are trades that I took myself today on the 15-minute chart on NAS 100. So we have rule number one. We are selling below 200 simple moving average. We are below the 200 moving average, which is this thick white line. So we're only looking for sells. We are only selling on the red star. So that's correct. We are only selling when it's overbought. So the RSI is up here around the 80 level. So it's overbought. So we're only selling then. Wait for LMIs to go same color. You can see they've both gone red. And on this one, I had my zone drawn as this support, so I knew that I should be watching it around here and wait to see if there was a bounce or not. And then I closed out when there was the bounce. Okay, guys, again, another one here. So we have the clear break off from the 200 moving average, right? We have the star, we have the downwards cross in the RSI from the overbought position. We have the two LMIs going red. Okay, so this was the open candle, and then I saw this opportunity and I took it. And again, this is a perfect entry right here. Everything is lining up perfectly. These are the things that I'm waiting for. Even if you entered on this candle with the star, you would have been fine to close at any point along here in profit. Okay, so that is another example of a perfect entry. Okay, guys, I have another two examples here of ones that I took personally. Again, so the blue line is representing where I entered. We have the RSI, which is overbought and crossing downwards. We are below the 200 moving average, so we're only looking for sells. We sold on the red star, right? And then we waited for the two LMIs to go the same color. And again, I had this support drawn here. I waited for it to hit that. I saw the rejection, and then I closed. And so this one is a slightly different situation where the star was printed. However, it is not advised to trade anywhere near the 200 moving average. So if the price is extremely near to it, it is not recommended to trade. You need to wait for a breakout. So I can go back and show you anything near the 200 moving average is kind of like a magnet. It's a very powerful zone of support and resistance. So the price likes to move around the 200 moving average. So if you're placing anything here, you're just going to be going in and out of profit, and it won't be a very fun trade at all. So you're waiting for those clear breakaways of from the 200 moving average. So going back to this one, we have the downwards cross in the RSI from a very high position. Again, just about 80 here. We have two LMIs going red. We are below the 200 moving average, and we had the star previously. However, this one again was exactly on the 200 moving average, so we couldn't take that. But we waited for the clear breakaway. We were watching this zone right here as a support, watching right here, and yeah, just kept holding all the way through until it bounced twice. Well, three times, and then went to retest the 200 moving average again. So those are some ideal entries for a sell, some ones I took myself, and those, yeah, so that's exactly how the strategy works. And now I'm going to show you the same for some buys. Okay, guys, so this isn't a perfect entry for a buy right here. So I had this resistance drawn from this previous high up here, right? And then as we can see, we are above the 200 moving average, so the thick white line. We are upwards cross on the RSI from an oversold position, right? We get this nice upward swing. Both of my LMIs go green, and then the star also appears. And it's clearly broken through this resistance right here, and was a very, very nice trade, this one actually. So that's an example of a buy. Just quickly again, oversold, so we're buying above 200, so we're buying, enter on the star, two LMIs go green. Okay, guys, so now that I've shown some perfect entries, I'm now going to show how to filter out through the different stars that you can get. So if we just look right in front of us here, uh, you could just draw your support and resistance zones, and you'd know that you're in consolidation anyway. But if you don't, again, so for example, a buy star here, we aren't coming from an overbought or oversold position. It's just kind of hanging out in the middle here. So you ignore this one. Again, same thing goes for this one here. These sell stars you're ignoring because we are above the 200 moving average. So you ignore those ones anyway. Again, the buy star is overbought, so it's not a good idea to place a buy. I mean, you could say that it worked out, but it's not following the strategy and it's not as safe as it can be. Again, ignore this sell here. This buy overbought. So you can see exactly how the RSI is helping us to determine when is the good time to take the buy or the sell, what the balance is in the market, what the buyers and sellers are doing, and it really helps to filter out through this kind of the stars that aren't so strong, basically. Okay, guys, so that pretty much wraps up the strategy. In terms of anything else I can think of, in terms of placing a stop loss, right? So if we're going for a sell at this on this star right here, you're placing your stop loss above the previous zone of resistance. So you'd be placing it up here, so that then if the price did come back to it, right, this previous zone right here, it would have to retest and then break through to actually hit your stop loss. And it's important not to put it too tight because you can get randomly wicked out. So just a bit above, somewhere up here is where I'd be placing my stop loss, around the 200 moving average. And then the same goes for a buy. Just for example, if we're buying here, I'm putting my stop loss at the bottom of the previous support zone. So when it's down here, I'm putting it probably around here. So if you're in a sell, you're putting it above the previous resistance zone up here. And if you're for a buy, just for example, because I know that we're below the 200 moving average, but just for example, if we're looking for buys, then my stop loss is quite far below the previous support level. So you can't get randomly wicked out. So that's how I place my stop loss. In terms of a take profit, I don't really believe in a fixed take profit level. I just take what the market is giving to me. And as soon as one of my indicators starts to point the other way, then I just close and I walk away for the day. And then in terms of how many trades I can get a week, I've had some weeks where it's been 5 or 6, some weeks where I've literally been 1. And I know it might sound like I'm not trading a lot especially on the 15-minute, but this is like kind of as safe as I can possibly make it. And it suits my lifestyle. All I need to do is wait for the alerts. And I'm free to do other things. And, if you just get 2 consistent, nice wins a week, that's all you need. You don't need to trade every single day, 15 trades a day just to make money. You can just, slowly rack up 2 wins a week, 3 wins a week, and then you're making, a very nice percentage every month. But yeah, that's probably the whole strategy video right there. Nothing too insane. This is a very user-friendly type of strategy. It's very simple. If you write down all the rules in front of you and you only enter a trade when these things are true, then you should be winning in no time. If you do have any further questions, please message me on Discord. I'm usually up here at the top. So send me a message, tell me what you think. But just as a final run through, sell below 200 moving average, buy above. Okay, only place sells if we're down here, only place buys if we're up here. Enter on the stars, again, sell on a red star, buy on a blue star. Only buy when it's oversold, if it's at the bottom down here. If it's below 20, that's the only time you're buying, because then you get the full run of the RSI. Like here, for example, you get the full run of it, right? Wait, and then sell when it's overbought. So the same logic applies. Wait for the LMIs to go the same color. Don't trade consolidation. Use your support and resistance zones to make sure you aren't just trading in consolidation. And that's pretty much the whole strategy, guys. So thank you very much for watching. Please give me some feedback. And like I said, if you have any questions, feel free to ask me. But until the next video, guys, take care. Thank you.